level of new hiring is quite dismaying. Among the things that were really helping the job market to expand was vibrant immigration and the diminution of legal and illegal immigration. Obviously, the focus ultimately being on legal immigration means that we have less labor supply. The most troubling aspect is the fact that payroll growth is grinding to a halt. New hiring is truly ground to a halt, and that's a dynamic we've really seen in place since April when tariffs were announced. We're seeing a high degree of caution on the part of employers and not much luck for those who are in the job market or looking to assess what their future prospects might be for their careers. Right now, we're seeing an unemployment rate that's still strong by historical standards, but the level of new hiring is quite dismaying. And the fact that we saw contraction in a recent month, meaning a job loss, really speaks to the anemic showing that the job market is exhibiting as we speak. If you look beneath the headline numbers, the sector participation is among the areas that point to weakness in the job market. And for several months now, we've really been seeing sort of the recession-resistant sectors, healthcare and social assistance, do a lot of the heavy lifting of hiring. And that broad situation is not one where there is any heavy lifting going on. We did see some improvement here in retail and leisure and hospitality, but those two areas, which previously had been quite dynamic in the reopening of the U.S. economy, have been rather lackluster in recent months. One of the most dramatic changes that has occurred in the last few years is that before the Trump administration, among the things that were really helping the job market to expand was vibrant immigration and the diminution of legal and illegal immigration. Obviously, the focus ultimately being on legal immigration means that we have less labor supply. That's a negative broadly because it impacts the availability of workers that employers can draw from. It's also a negative in the sense that we have less economic activity in the sense of consumer activity that is responsible for about 3/4 of U.S. Economic growth. And so the unintended impact of having less immigration is a lighter lift for payroll growth to keep the unemployment rate stable. And that's going to be the outlook for the foreseeable future unless there's some sort of change in the immigration environment. The Federal Reserve is increasingly concerned that the part of its mandate associated with the job market is at risk. And so that means that as they focus on two things as prescribed by law, maximum employment and stable prices, the stable prices part of the story is not where they want it to be. But the most troubling aspect is the fact that payroll growth is grinding to a halt. And so the risk is that the unemployment rate then begins to rise to levels that are distanced from the very strong situation that we've experienced in recent years. You know, we've gone from what was a very troubled job market when the economy was shut down in the early days of the pandemic to the reopening and led to a so-called red hot job market where there were 2 job openings for every unemployed job seeker. And now we're at a point where the number of open jobs is just slightly below the number of unemployed. And so that is among the dynamics that may lead the Federal Reserve to cut interest rates at the September meeting. Financial markets participants are betting on an interest rate cut. And I think as we look out over the next several months, among the key questions will be, does the Federal Reserve deliver on the hope for a rate cut in September? And if it does, is it 25 basis points, 1/4 of 1%, or 1/2 of 1%? And then the other part of the question is, will there be other rate cuts to follow through the end of the year? It will all depend on the data. That includes the employment data as well as inflation data. We do have the consumer price index and the producer price index still due before that September 17th rate announcement.